Hey, everybody, welcome back. So, I wanted to do a follow up video to my previous video, which was never blow another trading account. If you haven't seen that video, head on over to my YouTube page, Never Blow Another Trading Account. Watch that video. It is probably some really good content. But I wanted to share with you um, because a lot of people have very strong misconceptions about what how do they make money from trading. And unfortunately, I work for a prop firm, and that prop firm does not allow me, by reason of non-disclosure agreement, to release any statistics uh, from the software that we use. It's all proprietary stuff, and I can't really show you that. I do have some private accounts that I am running right now, but they're new, and I just started running it um, on my floor trader page over at StockTwits. If you're not a subscriber, come on over and you can see that. But I wanted to show you something because I find that a lot of people, when they begin trading, they really don't have a realistic expectation of how to make money and what your P&L should look like. And the closest thing that I can come that looks a lot like my P&L statement from my prop firm, um, is really, that's long term. Okay, is my poker results. Okay, so as you can see here, this is very similar, except it may be not nearly as the number of trades. So as you can see here, this is 235,000 hands, and you can see the P&L and what it looks like. And what I'd like you to notice is the long periods of nothingness. Like really, I mean, from here to here was really nothing. So you're talking almost 78,000 to 157,000, where I really did not make more than $2,000. Okay? And then finally it kicks off, and then another long period of nothing, then a jump up, and then a long period of nothing. Now, you just need to trust me. My long-term P&L at my prop firm, if I could share it, which I can't, looks almost identical to this in its structure. I'm not talking about the results. I'm just talking about the structure. And I think that's really important, that people really kind of wrap your head around the fact that I think a lot of people, when they come into trading, they think their results are going to be something like this, where like just straight up, and it's going to all look nice and uniform. But it never happens like that. Like, never, right? It always is. You have good periods, yes, they're there, but then you have long periods of what we call variance, where you do nothing and maybe you go down, right? You can see that. You can see that. These there's lots of periods where nothing happens, and that's just part of trading, right? But what you're trying to do, and the difference between poker and trading, is that we can compound money. Okay, so for example, you can see here, these are the different stake limits that I was playing: 25 NL, 50 NL, and $1 NL. But it's very difficult, if you can see, at 50 NL, right? Um, when I get to higher stakes, it becomes very difficult to make money. Okay, so what you have to do is, it's when you're playing poker, it's really difficult to compound your earnings, because you have to really become very proficient over a very large sample size. And believe me, this isn't a large sample size, right? I mean, 1,000,000 hands is a large sample size. This is only 235,000 hands, and the sample size is not that big, right? Um, this is multi-tabling as well too. So, but the difference with poker, with trading, is that how we can affect this, and instead of it being 4,000, have it be 16,000, right? Is that we can use compounding, right? And so when you're compounding over these periods where you're going higher, this number jumps up quite substantially. The shape of the P&L curve does not change, okay? I want you to really understand that. This is what you should expect over a long period of trading, 1 year, 2 year, 5 year, 10 years. You should expect that. But the P&L will actually, the shape of the curve, but the P&L will actually look different because the compounding effect of being able to add to trades. Okay, so that is the next thing that I really want to talk about. How do you compound your account? All right, and I want to just give you like a basic rule of thumb here. Just bear with me for 1 second. Okay, so if I take a basic compounding calculator, right, and let's just say that your goal is to make 6 to 10% a month, which is my personal goal. I would never, if I just punch in, let's say, 7.5%, right, per month, and I were to start off with a $5,000 account, you can see that after 12 months, I'd almost double my money, right? But it doesn't work like that, unfortunately, because of the fact that you have those long periods that I pointed out on that poker graph, right? Because of the fact that you have those long periods, you have to flatten it out a little bit. So even though over a year I may average 8% per month, because the compounding, there might be 3 months when I make nothing, right? And then in the 6th month I might make 22%, and the 7th month I might make 7%, and the 8th month I might lose 5%, but then the ninth month I might make 12%, right? Because it's never an even thing. You want to kind of flatten it out a little bit. So I would say more like 5, right? So as you can see, after a year, even with compounding, it's possible to come close to doubling your account, right? But where that number really starts to kick in is that when you do it over a large enough sample size of trades, and I'm talking like 2 to 3 years of trades, right? That's when you can kind of pump that number back up to 8%, right? Now, if you can do that over 3 years, you can see that that's an insane amount of money, okay? But it won't come in like that. But it will look like that at the end of the day if you do it properly. Okay? So that's the takeaway that I want you to understand, is that when you trade, just like when I play poker, you have to have a very long-term outlook. You can't think of today. You can't think of this week. You can't think of this month. You can't even think of this year. You really want to be thinking in terms of 3 to 5 to 10 years from now. Because if you can keep those numbers going, and you go over 6 years, right, you can see, that averages out. So you start off with a $5,000 account, and at the end of, let's say, 6 years, right, you've averaged $80,000 a year, right? But it doesn't look like that. It's not like in year one you're going to make $80,000. No, in year one you're going to be lucky. You're going to be lucky to make $5,000, right, profit. In year 2 is when it kicks in, and I think that's something that, like, people who have small accounts, or people with even accounts like 50,000, a trading account is never it's never meant to be taking money out. Okay, like I've started off with small accounts, like I once started off with a $20,000 account, and I said, I'm not taking any money out of this, right? I was in one of my good periods where I was in a relationship for 7 years, and I had other income that was coming in from another source, and I was not going to take any money out of my personal trading account, right? I was actually in the restaurant business at the time, where it was a long time ago, I took a hiatus from trading. Um, but I was still trading, right? And so you can see that at the end of that period in time, right, I didn't touch that money. I didn't touch that money until I got to, let's see how the numbers work here, until I got to 250,000, right? And over that period of time, and I think it took me longer than 33 months, it took me 47 months. But I got to 250,000 after 47 months in that trading account. But I wasn't taking money out of it, guys. Okay? So, all you people out there that think you're going to put $50,000 into a trading account, you're going to live off of it, and you're going to take money out, you're doing it wrong. Okay? That's not what you want to do. Okay? Let's just say, hypothetically, that I had $100,000 and I needed to do that. I would break it up. Okay? So, if I had $100,000, I would break it up. I would say, okay, I'm going to take half of that, all right, 50,000, and I'm going to trade that account in a way that I can pull money out of that account. I'm going to take the other 50,000 and I'm going to allow compounding interest, because let me tell you something. If you kept taking money, let's say you're an even good trader and you keep taking money out of that $50,000 account, you know what you're going to have in 4 years? You're going to have, if you're lucky, $50,000. And maybe if you're lucky, you might have taken out $3,000 or $4,000 a month on average. Okay? But you're still going to have squat. You're going to have $50,000 and maybe $3,000 or $4,000 a month if you're lucky and if you're really, really, really good. That's not how you become rich as a trader. Okay? You become rich by leaving your money in and letting that $50,000, okay, after, let's say, 40 months, turn into $1 million. Do you understand what I'm trying to say, guys? Okay? You become rich by leaving your money in the market and allowing what Albert Einstein called the power of compounding. So for all you guys out there that are trying to take a small account, you're trying to live off of it, you're wasting your time. It's never going to happen, right? You have to let your money grow. And that's why so many people, they come to me and they say, Steve, I want to be a trader. And I say, well, what's your other source of income, right? Why I teach, that one of the main reasons I teach is so that I can leave my money in the market. I don't want to have to be pulling money out to live off of, okay? All right, the only other exception is if you have a prop account and they give you a lot more than 50,000. Like, for example, if you started at my prop firm, you'd start off with $400,000 in buying power. But they limit you to a maximum of $200 loss per day, and they shut you down, right? But that's a whole other video for a whole other topic. So the takeaway from this is that if you want to become rich as a trader, leave your money in the market and allow compounding to work for you. If you think you're going to put $50,000 in and live off of it, terrible idea. It's never going to work. At the end of 4 years, you're going to be lucky to have $50,000, and you're going to be lucky to have pulled $3,000 or $4,000 out of the market every month. I hope that makes sense. I hope you guys enjoyed that. This is the way you get rich as a trader. There's learning a method like I can teach you that can give you great returns, whether it's 3%, even if it's like 3%, even if you take my course and it's 3% and you got $50,000, right? And again, over a large sample size, I don't want you pulling money out after a year, right? Percent, did I do that right? Percent. 3%. Okay? Even if you can't pull the money out, you can't pull 20,000 out at the end of the year. That's not how you get rich. You got to leave that in for 6 years for you to get rich. Okay? Now, I'm sorry I'm blowing a lot of people's idea of what they think trading is, but unfortunately, that's the reality, guys. Just like I showed you on that poker P&L, there's going to be long periods of time when you just go sideways, and then you're going to have very big spurts where you make a lot of money. I know that's painful. I know it's hard to swallow. I know it's not what everybody in the industry tells you and what other educators tell you, but it's the reality. If you want to become rich from trading, have another source of income and leave your money in the markets. There is a reason why all professional traders get a salary. There is a reason why, because money has to stay in the market, especially when you have a system that you can count on, that's reliable, like I teach. It might not work this month, but it's going to work next month. And it might have a drawdown, but over the long run, what I teach will produce very good results if you stick with it. But you're going to be frustrated as hell if you keep pulling your money out of the market. Does that make sense? Okay. Once again, I apologize. No other educator wants to tell you this, but it's the reality. Have another job, have another way of having income coming in, but still trade. Unless, of course, you can be a full-time prop trader where you have a lot of money that belongs to other people and you can take a percentage of it. Okay? Thank you, and bye for now.